Hi, everybody. Welcome to another monthly market outlook by Atlas Wealth Management. For more information on our services, please go to our website at atlasbuildswealth.com. We also have some articles, and you could also download a free retirement calculator. Hi, everybody. This is Ron Lang with Atlas Wealth, doing our February 2013 market report. First, we're going to look at the S&P 500 index, and then we're going to review our market leaders. Now, one of the things we've been talking about since early November, right after the election, is investors and institutions out there want certainty in the markets. So after the election was over, then we had the fiscal cliff, then we had the debt ceiling, and we had corporate earnings. Plus, we had a couple of big economic reports that came out, both with the GDP and also with unemployment. So one of the things that once we had that certainty past the fiscal cliff, and we pushed off the debt ceiling debate until February, March, we just saw our markets run here. And with everything going on, we could definitely see that our markets are overbought. Now, we also identified that 1550 was probably our target for the March time frame or so. So we are looking for a pullback. We didn't think that the markets would be as strong as it was over the last week and a half to 2 weeks, but actually the corporate earnings have looked pretty good. So you can see here by a relative strength index that we are in an overbought condition. So we're looking for about a 1 to a 3% pullback, perhaps to the 1474 level, or maybe even 1460 level. One of the other things that we want to look at when you want to look at price movement and price swings is the length of time for each of the swings, from a swing high to a swing low, or from a swing low to a swing high. And one of the things that we saw here with the majority of these swings is that they lasted anywhere between 28 to 34 days. Right now, our current swing is 32 days. So I believe that we are coming towards an exhaustive period. We probably could go as high as 1520 to 1530 before a pullback. I find it highly unlikely that we'll hit 1550 before we pull back, but with the way this market has been running, anything is possible. So that's one of the things that we're looking for there as far as our different price targets. One of the things that we would probably see is some type of a mean reversion, maybe even a pullback towards the 50-day moving average here at around 1445. Kind of at the worst, the 50-day moving average is usually the strength at 1418, but that would be a pretty big pullback at this point. So those are our different targets that we're looking at. You want to try and keep an eye on that. So let's move over to our market leaders. We're going to start off with Apple. Apple has been in the doghouse, folks, for a while. And it certainly isn't because they are printing money, which they are. They've been basically in the doghouse for several reasons. One, a little bit of the Apple luster has kind of worn off a little bit. The retail stores are still filled with people shelling out money for all the Apple products. Basically, the analysts have more or less said that their margins are compressing. So if the margins are compressing, they're going to make less money down the road. Quite frankly, I think that this is very oversold. Apple doesn't know what to do with their money. They're generating billions and billions and billions of dollars of free cash every single month. So we look to see that they're going to put that to some type of work, either towards Apple TV over the next 6 to 12 months, or perhaps maybe some other mergers and acquisitions over the next year or two. Perhaps even increasing a dividend. We'll have to see. 450 looks like it's probably the bottom here. If we get a pullback in the market, Apple has kind of been the leader, although it has been more divergent with the market over the last month. So we'll have to see what happens here. But we believe that 450 is probably the bottom. Moving on to ExxonMobil. Exxon has had a very nice run here since the end of 2012. Pulled back a little bit to the $90 level, which is a pretty good level. We see it probably going as high as $93 here, probably to this peak, where there were other buyers looking to get whole again. And once it hits 93, we think that this will be range bound for a little bit. Google has just been on a roll, folks. It's been a very interesting run since it came out with the earnings here back in October. Let loose a little bit with some additional sellers. Came down to a very strong demand area here where it took off out of. And then it's been on a very nice run ever since. So one of the things that we are looking at with Google is possibly a pullback because it obviously reached previous highs. So we might be getting a pullback to the 750, 760 level before we might hit our next leg higher. Walmart has really struggled towards the second half of last year, trying to find its footing. With all the fiscal cliff talks, a lot of people felt as if that the discount retailers would do a little bit better. And then as we approached the election, the price pretty much fell off the table and was range bound. What we're looking at is at Walmart gaining a little bit more traction again as we see higher highs and higher lows. So we're looking at about a 72 price target here before we get another pullback and tries to push through that level. Microsoft has just really not gained any footing. The Windows 8 Surface product was panned by quite a few analysts out there, although people love it on the mobile devices, like it on the tablet devices, but hate it on the desktop. So we'll have to see what happens here. They might even get a shakeup of management. Wouldn't surprise me if we saw Ballmer step down before the end of 2013. GE has been on a very nice run here. We think we're going to get a little bit of a pullback as we approach the $23 level. As we approach the $23 level, it pulls back. We want to see some really good green up volume here, and if we see that, we'd like to see it push through $23.50 and then $24. IBM has just been on a very nice tear since earnings came out. One of the things that we're looking at here is once we get a pullback in the market, IBM could lead that way in a pullback to probably fill this gap around 195, which I believe is probably a pretty good buying area here if you're looking to get in or add to your IBM position. Chevron's been on a very nice run too, as you can see. Once it popped up to the 116.50, 117 level and made these buyers whole again, it pulled back. I think we're going to get another pullback here to the 108, 109 level before we try and push through that 117 level again. AT&T, I am long this trade, as I have been for a while, for those of you that have been keeping up over the months. One of the things that we're looking at here is for AT&T to truly push through this 36, possibly up to that $37 level. Still paying an excellent dividend, a little over 5% on an annual basis. And what we might see here is people getting back in to very nice dividend paying stocks, not only for capital appreciation, but obviously also for that dividend yield. Procter & Gamble has just been on a tear. It was in this trading range forever, and now has just not only broken out, but has just uncharacteristically just moved up significantly higher over this month. I could tell you that if you look at how that price action looks along with a lot of this up volume here, I would love to tell you that when it pulls back to the $73 range, it's a buy, but it looks like it really wants to go higher, maybe as high as $76 to $78 before there is some exhaustion. Coke just can't get out of its own way. Basically, it had a head and shoulders pattern here, really just in a range-bound downward spiral. Basically, it's basing, and it's trying to get higher. With the market run that we had a nice little pop here in the beginning of the year, and then it flattened out. It really has to get through this $38 level with some nice up volume before we could even tell you it's even going to get back up to $40, which would be another consolidation level. Home Depot, after a little bit of fiscal cliff worries, had a nice little pullback and then back up to a tear again, all the way from 61 to $68. And one of the things that we're looking at here is probably a pullback to the $64, $65 range before it continues its long-term upward momentum. McDonald's finally regained its footing. Back back in November, we had talked about that it looked like that was a pretty good buying opportunity around the $83, $84 level. And as you can see there, other than a little pullback with the fiscal cliff, which was actually a bear flag pattern for those of you that follow that, we had a gap up with the fiscal cliff, and look at these higher highs and higher lows. We could be reaching a little bit of exhaustion, but I would say this thing could push up to 98 and possibly even through the $100 level within the next 60 days. Caterpillar, pretty amazing here. We had called for a $100 price target back in the September-October timeframe, and the amazing thing is that we just got a tremendous amount of consolidation here. We didn't really get a lot of upward momentum because we were looking for $100 price target in late November, early December, and with the fiscal cliff, it just stalled that momentum, and it looks like we were right on that price target. For those Dow theorists out there, you should all be happy. It finally broke out of this range, and you can see 5,300 was a pretty big threshold that once it pushed through, it's just amazing on the continuation. And typically the way Dow theorists look at it is that we are not going to make new highs in the market, both in the Dow and the S&P, unless the transportation index is also making new highs. So one of the things that we need to see here is a breakthrough and a breakout of 5,900. If we see a breakthrough and a breakout of 5,900, we could definitely look at our markets going higher. What I would like to see to create more buying opportunities is for a pullback to this $56 level before we go higher. Thank you for attending another monthly market outlook video by Atlas Wealth Management. Visit our website at atlasbuildswealth.com for more articles and also other event dates. Thank you for attending.